Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we are jumping down into the world of Bitcoin. We're going to be taking a look at the 1 hour, 1 day and 1 week timeframes, what's been going on with the price action and where I think things are heading next. Now as I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into today's video, kicking things off with that 1 hour time frame. So here we go, right? So we've got Bitcoin here paired up with USDT on the BitGet spot exchange. And yeah, we're still tracking this idea of a fifth wave move to the downside. Now, there's a few things going on here. I've added in an SMA along with our EMAs. We basically have the death crosses going on. Okay, so if I just remove that SMA for a second, you can see that we have the 50 short-term price action going down lower than the 200 long-term price action right here at the point of recording this video, a little death cross on our 1 hour time frame. It's not only on the hour time frame though, we'll go through some of those other time frames in a second, but it's not looking overly too positive. If we throw the SMA in here as well, you can also see how the SMA is dropping down very, very sharply. Again, not a good sign for things to come on BTC. Now we're up in the overbought area. Our low end target range is still down here at 26,191 to 26,309. And so for the most part, we are still progressing down into these lows to complete out our structure. Okay, now this can of course avoid hitting the 1.618 level on a bigger impulsion, and it doesn't really have a good structure outside of a diagonal at the top end as we spoke about yesterday. So for the most part, we can still be looking at, this potentially being a good, strong area for support where we bounce on up and we can progress on further. Now, we can also note that the 8 hour and 4 hour stochastics are in an oversold position. So momentum looks like it is likely to shift back to the upside once we complete the fifth wave movement. The only question is, are we going to break that local high at 27,500? And so if we can do that, then of course, we'll have a good, strong run up there. Okay, the weekly is obviously in a oversold area as well, but I'm less concerned about that, and we'll talk more about that in a moment. So for our hourly chart, essentially it still looks like we have a little bit of progression to the downside to be had before we can go ahead and start to enjoy some of the better runs upwards. Now, as I come on over into the daily time frame, you can still see that we're tracking a fifth wave move to the downside. We are potentially starting the wave 3. So our wave 1 is basically this move here, right? So this wave 5 will complete wave 1 essentially, or is basically potentially a wave 3 of a wave 1 of a wave 5, as you can kind of see here. Or wave 3 of a wave 5 and so forth. So we know that we're nesting in quite nicely from an Elliott wave theory point of view, and our low target range is 22,696 to 23,875. That hasn't changed for quite some time, and the only way we're going to break out of this structure if we want to be bullish is for us to break above 28,588. Right, we'll throw those EMAs on and you can see a death cross here looming. You can see it's about to happen today. Right here, I mean, it's a little bit bigger. You can see the red line is the 50 EMA and the white line is the 200 EMA. Right here, there's a death cross on the daily time frame. You can see we've got plenty of momentum to shift us down, so it's not looking strong on our daily time frame here. Now, that's just the EMAs. If we throw on the moving averages as well, you can see that we already crossed up here the 50 moving average and the 200 moving average crossed. That happened over on the 11th of September, but we're about to get a 50 moving average and a 200 exponential moving average cross as well. As you can kind of see right here, the death crosses on the daily time frame really coming together strongly. We're about to see a pretty big, significant move to the downside, in my opinion, as people panic. Now, one of the things that's worth noting is that these death crosses, golden crosses, they only show you what's already happened. They're not showing you anything else above and beyond that. It is as simple as literally what's already kind of occurred, and people will react to it because it has these kind of scary names and all that kind of good stuff. But for the most part, it is just kind of showing us what's already happened. Now, as a result of this, though, people will panic, and it will kind of lead us into this third wave move to the downside on the daily time frame. In my opinion, it is essentially going to create the structure here. So the idea of Elliott wave theory is it tracks people's behavior. This death cross here is going to trigger this next behavioral move to the downside into the wave 3. Okay, so that's kind of where the daily sits. It is not looking great, right? And as much as I want to be saying, look, we're going to the moon, it's fantastic structures, we're in a bull market, that simply is not the case. Now, we take off the stochastic RSIs, throw the volumes in. You can see here how volumes are not very impressive at the moment. They're very, very insignificant in comparison to where they were back in February and March time, right? We can see that volumes are down low. Now, we can also take the volumes out of the equation here, throw the RSI in. You can see it's at the midway point. It can go in either direction on that. From a divergence point of view, we did have a bullish divergence here. And that's now done as we come up to those resistances, and of course as we have this death cross, and we can start to see a move down, but no divergence is being noticed hidden or otherwise on the divergence indicator either. So for the most part, it looks exactly as it is. We're in a bearish structure from an Elliott wave theory point of view, even though we are yet to break the smart money concepts structure that is still bullish. Okay, so smart money concepts is a little laggy in comparison to Elliott wave theory, but I think eventually once we actually break this low down here, that's going to get us a confirmation. We need to get a close below 24,807, and we're going to get a change of characterization from a smart money concepts point of view. Okay, so as I said, the only way that the bulls are going to be able to break out of this is for a run upwards to 28,588 or higher. If that does not happen, then unfortunately we are talking that $22,000 to $23,000 range. Let's take this to the weekly time frame. The weekly time frame shows this kind of really bearish scenario. This is not one that we want to play out, but it's something that we have to kind of acknowledge and, take in our stride. We know that there's CME gaps at $20,000, and there's also CME gaps up at 35,000. So we know that there's areas here of interest for us to kind of keep an eye on. But for the most part, we need to be quite cautious in terms of where we think things can potentially go. So, for Bitcoin here, we do see a potential run back down a little bit lower. We look at the curved lines that we have here. So basically connecting all the peaks and all of the troughs. So we can see we connect all of those lows, okay, and we get a curved line that's approximately 11,500 USD. Okay, so you're talking 11,500 to connect into the line that appears to have acted as support previously. Now, if you take a curved line across the top here, you can of course see that we connect the highs from 2013, the highs of 2019, the highs of April 2021, and the highs of October 2021. We can see that there's a potential progression upwards of $120,000-ish or $110,000, right? So again, if we are to see diminishing gains, bull run to bull run, which is the most logical explanation on the elasticity curve, then essentially we will be hitting upper resistance at around $110,000 for BTC. Of course, the main takeaway here is that potentially we are not done with our bearish market, and we still have to come down a little bit deeper, tap in this line like we saw back in March of 2020. Now, again, that could be an anomaly in here, okay, and we could adjust this accordingly. So if I were to adjust this, I would be looking at adjusting it to here instead, and in which case we would perfectly land this, pretty much perfectly anyway, right up here. But it would say that we've kind of reached the peak of the elasticity and we start to turn on down. You can see how this curved line, if we do kind of treat it here as our kind of endpoint or kind of support to be found here, and we have the anomaly of 2020, then we can start to see that this comes and dips down. Okay, that means that essentially we're not in a great position. So just kind of bear these things in mind. I'm not saying anything is guaranteed at this point. One of the things I do want to say though is it looks like we are rewriting the BTC history. And what I mean by this is that we now have a lot more newer variables for Bitcoin than we had seen previously. In the previous kind of markets, it was quite predictive between these two bullish markets because they had the same underlying variables. If the same thing happens, then you can expect the same result. However, if you do something different, you shouldn't expect the same result essentially, right? And that's exactly what we see here. We see new things occurring that haven't happened in Bitcoin's history, and therefore it's foolish for us to think that we're just going to repeat what happened previously even though we have some different setups, right? So we're rewriting history for Bitcoin. I think this is very obvious. Most people should be aware of this, of all the new things that Bitcoin has been doing in 2022 and 2023 that hadn't seen previously. That means no one really can look at history of Bitcoin and expect the same results or expect for things to repeat in the same manner. Things will be different this time. And I know that's something that a lot of people say, but for opposite reasons. Just kind of bear these things in mind. I think essentially there's a lot of options here for Bitcoin and nothing is set in stone. So we are up in that upper area of resistance, got rejected from the 28,600 to 32,289. We did have the CME gap at 35,000. We failed to hit that. I was hoping we'd hit that before we retrace. Now I think more likely to be 20,000, and we'll see how price reacts at 20K. If we lose 20K, then 17K is the next stop. Lose 17K, you're down to new bear market lows. We don't know what the catalyst will be for that. There's many different things. You can pick and choose all the different black swan events that you want, because obviously there's so many different things to choose from housing crisis all the way through to a banking crisis, all the way through to just the fact that most Bitcoin, or let's say most, a significant portion of Bitcoin is held by retail investors, and so that to me is quite worrisome. But let me know what your thoughts are in the comments below. Do you think the bear market low is in for Bitcoin, or do you think that actually, we probably do have to dip down just a little bit further before we actually are done with the bearish times? Let me know in the comments below. I'm going to leave the video there. If you found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.